Whether you're a beginner or an expert in the stock market, it's always good to continue learning and continue sharpening your sword. Today I wanted to give you a quick crash course in everything I do from beginning to end when I enter and exit day trading momentum stocks. I will go over how I find the stocks, how I analyze them quickly, and some of the most common patterns that I look for before I enter a trade. I'll go over some of the indicators I use as well as the studies to help find and analyze these quickly. I'm Josh and this is Zero Gravity. If you like the stock market and you like hearing and getting updates on new and exciting stocks and tips and tricks out there, please think about hitting the like and subscribe button, and let's get started. One of the first and most important parts is creating a plan, because failing to plan is planning to fail. One of the most important parts is making sure you have some kind of scanner set up to catch these gaps pre-market. Now TD offers a scan that you can use here, and just even a simple basic setup, you can find the gaps. I usually set it the gap target a little bit higher, 4.5, but you can set it as low as 3 and still find a ton of stocks. There's 396 as of this morning. Now Webull and a few other companies have ones as well, and you can also find a free one if you don't use either one of those two brokers, such as FinViz. FinViz, you can set up all your criteria here. A lot of people will do a search in particular for low float stocks. Low floats generally have the largest jumps and largest increases throughout the day. Now, once you have your scanner set up and you've already started it, what I like to do is jump right into the trades here and start looking at the charts pre-market. You can sort it by the largest gap, of course, and you can actually go down the list and look at each one of these moves. Now, generally, you're going to be doing this pre-market. I'm doing this in the evening to show you as an example, but generally, you're going to be doing this in the pre-market, checking out these stocks. Now, when I look through these stocks, first thing I want to look at is to make sure all these bars are filled. I don't want to see any gaps or the little slash marks showing like extreme low volume, anything like that. You want stuff with high volume, and usually you'll set that in your screener as well to try to weed out a lot of those super low volume stocks. Now, one of the biggest things I always do, and I think it's the most important here, is when you're going through and you're screening through these stocks, it's important to see which ones actually have news or something, information that is surrounding them, and that might be a catalyst as to why it's increasing. So first here, you look at ACB, which is Aurora Cannabis, and you look up here and see what the news is. The news on Aurora is Bank of America reinstates Aurora Cannabis with neutral rating, $12 price target. It's currently trading at 9, so that's actually a great catalyst for this stock to continue going higher. So this would definitely be one, as of this morning, that I would continue to watch and continue to put on my list there. APA, the news this morning was several energy companies are trading higher following smaller than expected build in crude. Now this is one that I would probably just go ahead and take out of my watch list pre-market. As you see, it did have a huge run up, so you can definitely trade the momentum, but I'm trying to be a little more specific. I want to find stocks that are moving on news. News is an extremely important catalyst, and that will catch the eyes of a lot of traders and investors. Now this one here, APHA, Alpharia Inc., it says it's trading higher in sympathy with Tilray after B of A reinstated a buy rating of stock announced 23 price target. So this is a sympathy play, which definitely there was money to be made there, don't get me wrong, but this is another one that I would probably continue looking for those strong news catalyst. And as you go through, a lot of this is pretty quick. You can scan pretty fast when you're clicking the stocks. Just look at the news. If there's not any news today or anything like that, you don't know what this catalyst is. So I feel like you're taking a little bit more risk when you're jumping into it. You can still play the technicals and still make trades throughout this, but I look for those solid news catalysts that are going to continue driving the stock higher throughout the day. And the biggest thing about being a momentum or day trading is you don't have to be right 100% of the time, but you do have to be right most of the time. And when you're trying to be right most of the time, you need to make sure that your plan is solid. And part of my plan is making sure the stocks that I plan to day trade throughout the day have a strong catalyst driving them. So as you look at this one here, ATRC, the first thing, shares are trading higher after the company reported better than expected Q1 earnings per share and sales results. So that is definitely a catalyst that would put it on top of my list for my stocks to watch throughout the day. Now this is at the end of the day. As I said, I'm doing a recap through a lot of these stocks here, and I would have caught these first thing in the morning pre-market based on this news here. Now once you've identified the few stocks that you want to watch throughout the day and possibly take trades on, you can either create a new watch list for those stocks, or you can leave them here and just try to remember or write it down yourself. A lot of people will also take the charts up and pull a multiple chart tab, and then you can put all the different stocks that you plan on watching throughout the day in different charts here, so you can easily keep an eye on each as they go. I personally like to use the exponential moving averages, the stochastic full, and the RSI. All of these are great indicators when you're day trading and momentum trading. Now with the exponential moving averages here, I like to use 9, 20, 50, and 200. And I actually have these color coded. I've seen so many people use different colors, you know, blue, green, purple, red. And honestly, I don't know how they tell a difference. Me with mine, I made them very simple. So no matter what I'm doing, I could be drunk. It doesn't matter. I could look at this and figure it out pretty quick. I actually went green, yellow, orange, red, almost like the fading of the color. Green, yellow, orange, red. That makes it super easy to remember. So I know my green is 9. I know my yellow is 20. I know my orange is 50. And I know my red is the 200. Now after you have your chart set up, you have your studies on, you have your exponential moving averages, everything set up, now you're ready to start taking trades. Now part of your planning, you should have what you're looking for, what kind of patterns in the chart, or what kind of breakouts you're looking for. Now with day trading and momentum trading, we're mostly looking for the breakouts. And 3 of those most common ones are going to be a flat top, which I'll kind of try to identify all 3 of them here on just Aurora this morning here. But a flat top, you would look at this position here, you had a double top there, and then it came back up for the triple top. So what I'd be looking for is for it to break through the already hit resistance. It's already hit resistance multiple times. Now I'm looking for it to break through that resistance. Once it breaks through that resistance and completes a full candle here, that's when I would enter. The next one you're watching for is the bull flag. Now the bull flag on this chart is absolutely horrendous. There's some much better ones out there I'd rather show you. But just for example, we'll take the bull flag. You see the trending down here. Once it breaks through the bull flag, you would actually enter into the first full green candle, breaking a new high over the previous red candle. So you would enter here and you would end up riding this thing all the way up here, just depending on your stop losses. The last breakout I would like to cover with you today is the pre-market high breakout. So you have your pre-market high, and all you're doing is watching for the stock throughout the day to come through and break through that pre-market high. That's usually a big bullish sign, and you can usually pick up a good run out of it if everything is perfectly aligned. So I just identified 3 different momentum patterns out of this one simple chart here, but you can look at different charts, and a lot of times people are a little more specific on what exactly they're looking for and what they're trying to get out of it. So as we look at the ATRC this morning that had the upgraded guidance, there's some huge double red candles here, but then it just had a huge gap to a green candle. So you'd easily enter the position here and ride this thing back up. With momentum though, you never want to jump into this at the very beginning of here. You're going to watch the green candles. You're probably going to miss the initial move. Most people do. It's completely understandable. But what you want to watch for is you want to watch for the volume to decrease and some kind of pullback. Once you have that pullback, you watch for the bear flag. Me personally, I'm watching for the bear flag. So the first green candle to break through that, I would pick it up. Now this is the 9 on your exponential moving average. A lot of times you'll see a bounce on that. On something with a high push, high momentum, you're going to see a bounce off of it. So you want to see a pullback back to the 9, and then you're going to buy as soon as it breaks through, and it's going to rip up. Now, when do you want to sell these moves? A lot of people will set a short stop loss. Of course, when you buy in here, you want to set your stop loss at the previous low of the candle before it. So you would set your stop loss right here, and you could ride it up if you wanted to and just let it go. Now, a lot of people are more advantageous at taking early profits, and this is completely up to you and depending on your style of trading. Some people do a 3-to-1, a 2-to-1, a 1-to-1. It's completely up to you. Depending on how often you're right, you may want to adjust that marker just to make sure you make up for all of your losses. Because if you have a 3-to-1 win to loss ratio, then you can lose 3 times to every 1 time you win and still be a break-even trader. So it's very important. Now, like I said, a lot of people will be out right here. The first red candle to break the previous green candle's low would be a sell signal. So you would buy in here and you would exit here. This isn't a huge move, but it's definitely enough to keep money in the bank. Now, once again, you're going to watch for this. And a lot of times adjusting your chart from the 5-minute to 1 minute, you'll see a lot of different trends and channels. So I try to be consistent. I think the 5-minute is the longest time span, but a lot of times I'll break it down to the 1 minute if I wanted to get a little more aggressive and see a little more of the price action. So as I said, if you're watching the 1 minute, it comes down, you watch this trend down, and then it breaks through. You buy here, pops up. Now, depending on your stop loss level, you would still be in through all of this, and you would end up being out right here is when it breaks out. And then you would continue to watch it until it uptrended down again, which is right here. And then when it broke through and entered the new green candle, you would enter and ride it all the way up. But like I said, everybody has their own stop losses that they set and everything like that. So you can do a trailing stop. You can do a lot of different things here. A lot of people watch until it breaks through either the 9 or the 20. If it breaks through the 20, then they're out. If it breaks through the 9, then they're out. There's a lot of different ways to do it. But most of the time, you're in and out of these positions in a matter of minutes, unless you have a strong conviction that the stock is going to continue to run throughout the day, or you already have enough profit locked in where you're comfortable with allowing the leash to loosen up a little bit and allow the stock a chance to run. Now that we've covered getting started, everything to watch for, when to get in, when to exit, I just want to go over 3 of the biggest mistakes that I usually will see people make. One is FOMO, fear of missing out. When you see one of these big runs like this, a lot of people will see it already way up and they'll go and jump in just at the perfect time for it to start coming down. Now when it's coming down, they start to panic, freak out, and they sell. That's why you set up a plan before you start and you execute that plan. If it comes down and it doesn't go as originally planned, make sure you have your stop loss and you follow it. That's how you set up your risk reward ratios before you start trading to make sure you're successful in the end. The second most common day trading mistake is overthinking your trades. So you make a great plan, you see this position here and you know everything lines up to exactly the way you planned it. You get in and the trade doesn't go the way you want. So your conviction is stronger than the trade itself. So the trade goes against you, but you think that you know that it will end up correcting itself. In this particular situation here, it would. But a lot of times that doesn't happen. That's why you got to make a plan before you start and stick to it. If you set a stop loss here, cut it. That's one of the biggest mistakes anybody ever makes, is they don't cut their losses soon enough. It's not about the amount of losses you take, it's how much and how quickly you can cut those losses to maximize your wins. Number 3 is just not following your plan. Following your plan is designed by you for you to help you be successful. A lot of people will get impatient, worried. They'll find a stock that looks like it's jumping up. It'll look like a halfway kind of what they're looking for, and they'll jump in hoping for the same kind of outcomes. If you don't create the plan and stick to it, what's the point of having a plan? Make sure you follow what your guidance to yourself is. That's why we do this. That's why we create it. Now, lastly, if you're still watching this, as you know, I love Palantir, and you see we've been bouncing around, trying to break this 24. So one of those that I just mentioned to you is about to happen here. Can you please leave me a comment and let me know what kind of breakout pattern we're looking for in Palantir? And if you enjoyed this content, make sure you hit the like button. If you'd like to see more of it, make sure you hit the subscribe button. I appreciate it very much, each and every one of you guys, for sticking around this long. Y'all have a great and wonderful rest of the week, and I'll see you next time.